It's funny how much people underestimate the capability of the income tax department to get information on the financial transactions that they undertake during the financial year. Now, most of you must be aware of information that shows up on your form 26AS regarding, say, FD interests that you earn, or if there is any TDS deduction on immovable property that you may have sold during the year of over 50 lakh. However, more than that, there are a number of transactions that get reported by different financial institutions and other departments of the government to the tax department, which is why it's essential for you to know that while filing your ITR, your incomes should be congruent to and in sync with your financial capability of undertaking these transactions. What are these transactions? So if you've made a cash deposit of a total of 10 lakhs or more in a financial year in your savings bank account, the tax department gets to know about it. If you've withdrawn cash or deposited cash of over 50 lakh in a financial year from your current account, the income tax department gets to know. If you make a bank FD of over 10 lakh in a financial year, the income tax department knows. If you make a credit card payment of over 10 lakh in a financial year to one credit card company, or if you make a credit card payment of over 1 lakh in cash at any time in the financial year, the income tax department knows. If you make foreign exchange payment through debit card, credit card, traveler's check, if you basically buy foreign exchange of over 10 lakh in a financial year, the income tax department knows. If you engage in sale or purchase of immovable property of over 30 lakh in a financial year, not 50 lakh after which TDS deduction is applicable, but 30 lakh, the registrar of immovable properties will tell the income tax department. Moreover, if you've invested in securities, shares, mutual funds, undertaken transactions where there has been an infusion of over 10 lakh in a financial year in any of these securities with a mutual fund or other intermediary who's helping you make these share purchases or investments, the income tax department knows if it's over 10 lakhs. Also, if you make payment for purchase of goods and services to any person of over 2 lakh in a financial year in a single transaction in cash. So if you're making a cash purchase of goods or services of over 2 lakh in a single transaction, and the person who's making that sale to you is covered under tax audit by the income tax department, they're supposed to disclose it and the income tax department knows. This amount of financial literacy regarding your tax transactions is important so that when you file your tax return, you know that your incomes have to be congruent with and your financial capability has to reflect in those financial statements for the tax department to know that yes, you are capable earning those kind of incomes to undertake in those transactions. However, if your income tax return is not congruent with this information, you are sure to get an income tax notice. Share it with someone who may need it.